Good morning. You are listening to National Real Estate Auction Radio. I am your host, Doug Dennison, and we are broadcasting from beautiful St. Augustine, Florida, the nation's oldest city, at WFOY 1240 AM studios. Through the power of the internet, this program is being streamed worldwide on 1240news.com. The show will also be archived on rawauctions.com, as they are the sponsor and host of this program. Additionally, the show will be posted on youtube.com. We're going to be talking about real estate auctions, past auctions, upcoming auctions, different real estate markets across the country. We've got lots of topics today. To help us out, we've got several real estate and auction leaders calling in, and we've got people from Maryland, Florida, Michigan, and again from Florida calling in. 4 different VIP real estate experts calling in. We're going to try to do basically perspective from their view on what happened in real estate in 2011, and also try to convince them to give us a little bit prediction. And I know that's always difficult to look in the crystal ball, but we'll push them a little bit and see what they think is going to happen for 2012. Should be an interesting show. The radio show mission statement for this program is to provide educational experience for listeners in our promotional format for auctions across the country. We are, I think, in our 9th or 10th month. I think we started in April of last year, every week, and we've appreciated your listening to us and all the experts that have called in, and there's got to be probably 50 different experts, maybe more, that have called in, given us their opinions, their feedback on the marketplace, past auctions, promoting upcoming auctions. RAL Auctions is, again, the sponsor of our program. RAL Auctions is a national real estate auction firm that started in 1936. They do online auctions, on-site auctions, and ballroom auctions. They have offices in Florida, New Jersey, California, Georgia, and have alliances with auctioneers and real estate brokers across the country. They do government auctions, bank auctions, bankruptcy auctions, and much more. They have a big auction schedule coming up, so check out their website on rawauctions.com. That's ROWELL auctions with an S.com, or you can call them at 800-323-8388. They sold more than 1,600 properties last year, real estate properties last year, in many different states, national company. Again, that telephone number for RAL Auctions is 800-323-8388, and their website again is www.rawauctions.com. The people are viewing, or not viewing, but listening audience are real estate brokers, real estate investors, real estate media, bankruptcy attorneys, banks, government officials, and the general public. And again, part of our plan is to really try to educate people that are the general public that want to know more about auctions. And again, we're trying to provide a promotional format for auctions across the country. What works, what's good for bidders, what's good for sellers, and using the experience that I've had, which is I'm going to say about, I think it's 22 years, maybe more, of being an auction project manager for real estate auction firms. An auction project manager isn't the one who does the chanting or being up in the front. I'm kind of the guy that's behind the scenes. I write proposals. I go to board meetings for banks, tell them how auctions can help them, what it would cost, what the commission is, how we're going to work with other brokers, and we always want to work with other brokers. Let's go to our first call. Good morning. You're on the air.
Doug, Steve Papermaster, good morning.
Well, Steve, how are you doing, sir? And thank you for calling in on this Friday. Tell us who you are, where you're from, and what you do.
Oh, sure. Again, Steve Papermaster. I'm the president of First Title and Escrow. We're a nationwide title and closing services company. We work with, on the REO side, we work with purchasers or organizations looking to dispose of assets on a local, regional, nationwide basis, managing the transfer and title issues associated. We do things such as vendor management services for larger organizations looking to outsource parts of the default process.
Mm-hmm.
And also do things on the origination side as well. Anything related to title insurance closing related service.
For the general public, and again, there's a lot of real estate professionals that are listening, but what does title insurance do? Why do you need, as a buyer of a property, title insurance? Why get that title insurance?
Well, in the simplest explanation is to protect the rights that you got when you bought that property.
Mm-hmm.
It's that simple. Remember that the transfer of title involves the search of real estate, which means going into the land records, finding anything that involves the property that buyer is buying. Whether it's mortgages, tax liens, it could be code violations, unpaid water and sewer charges, and things like that. So when you buy a title insurance policy, it guarantees that the search that was done, that was provided to you when you purchased the property, that was disclosed to you, is clear of all those problems, or those problems will be paid and satisfied at closing when you acquire that property. And in the event there's a mistake, or something didn't show up on the land records, or something was missed by a searcher or a title company, then they can go make a claim and have an insurance company pay for that loss. They will make the buyer whole.
I got it. So, simply said, an insurance policy to make sure what you bought is really what you bought, and if there's a problem, the insurance policy will cover you for any basically problems on that.
Oh, yes. And it's become much more important recently, the last year or two, as people are hearing about robo-signing and issues related to defective documents being recorded. It could come down in a number of years where someone challenges a transfer or a deed or release, and this is something that your title insurance policy will cover you for.
Robo-signing is in the news, but for our general public, what is all that about?
Well, what that has to do with is during the onset of default, servicers, law firms couldn't keep up with the work that they were doing. So what really it happened was people that, perfect example, was some particular servicers would have one person supposedly signing all of the documents that related to the docketing foreclosure process, where that person couldn't in any way, shape, or form signed all those documents, so they had other people signing on their behalf, which caused a huge stir and led to attorney general litigation in a number of states. So that is one of the things in the last year that has held up the foreclosure process significantly. With the onset of the attorney general litigation, number of servicers, the largest servicers, stopped docketing foreclosure sales in a number of judicial foreclosure states. And some states in particular, ours where we're based in Maryland, the largest servicers, due to this litigation as a result of the robo-signing and other problems, haven't filed a new foreclosure action for over a year and a half. So you can get an idea of the backlog that we have in people that are delinquent today. I was reading a stat yesterday that almost 40% of all loans in foreclosure have not made a payment in 2 years.
Wow.
Yeah. So I think they said the average time right now of a of a foreclosure sale being completed, it's now averaging 631 days.
That's crazy.
So that is as a result of foreclosures that were started that were stopped due to holdups like this, due to servicers not wanting to proceed with the foreclosure sales, and also due to other efforts that were taken as well, which everyone knows about, from the short sale, from short sale approvals that people are trying to get when they're in foreclosure, to loan modifications, and a number of things that the administration, presidential administration, was pushing to try to prevent people from losing their homes. So it's extended out a lot of homes. It's extended out the process, and therefore there's a lot more homes that at some point will be going to foreclosure, but it just extended the sort of the mess that we're in right now. A couple, more years. Whoever knows how many years that's going to be, I don't know.
Well, you've kind of given us a perspective of the current, or basically what happened last year. What's your prediction for next year? And you've been in this business for a few years, like me, 20 plus, and we hate to tell those numbers because it makes us feel even older than we are. But
yeah.
But what do you think is going to happen in 2012 in your perspective?
Well, what I think is eventually, with regard to the foreclosure sales, they're going to start going, which is going to provide more inventory to the market, which is good. Hopefully, the interest rates can stay down. I'm not sure how long that's gonna last,
right.
But the inventory will start flowing, and hopefully it'll flow at a good pace where the market won't be flooded. I think the servicers have learned that the last thing they want to do is flood the market with inventory, which will then push prices down. So I believe that they should do it over a steady time period, but what that's going to mean then is a multi-year problem or multi-year disposition of assets that in the REO inventory for a long time. So it's going to take a while to push through the process. So maybe the story, maybe this doesn't really change until 2014, 2015. But I think we're going to see some of the same. The question is, are the interest rates going to stay down? Is unemployment going to get better? I heard the unemployment numbers this morning went down again. We're at 8.5% unemployment, which is just great. So hopefully that's going to bode well for the new inventory. Maybe that means some new buyers. Maybe that means less people defaulting, because the current delinquencies are down. It's the serious delinquencies in the properties in foreclosure that are up. So maybe we're going to see a little bit more sunshine for existing borrowers and less defaults.
Well, Steve, thank you so much for calling in. How can people get a hold of you?
Sure, they can find us on the web at firsttitleservices.com, or they can reach me at 301-279-0303. Doug, thank you.
Well, thank you so much, and again, I appreciate you calling in and really kind of giving us a perspective from a title organization. We get a lot of brokers on, and they kind of give us their feedback, but a title person of your stature is very, very important. Again, what's your website?
It is www.first, and that's spelled out, First Title Services.
Very good.
SERVICES.com.
Thank you so much, Steve. And again, we've been friends for a while, and appreciate our relationship, your friendship, and look forward to working with you in the future.
Thank you, my friend. Take care, and Happy New Year to you.
Happy New Year to you. Bye-bye.
Thanks. Bye-bye.
Okay, that was Steve Papermaster. We just had another caller, but I think I missed him. Hopefully they'll call back. Talking about 2012, it sounds as though Steve Papermaster's opinion was, we're going to have more and more of these foreclosures coming up. Let's go to another caller. Good morning. You're on the air.
Hey, good morning, Doug.
Hey, is this Bill?
It is Bill.
Hey, Bill. Thank you so much for calling. Tell us who you are and where you're from and what you do.
All right. My name is Bill Reichel, president of Reichel Realty and Investments. We're based in Palm Beach Gardens, Florida. Been in business for 25 years. We're a commercial real estate firm. We handle leasing, management, sale. We do a good amount of workout and receivership work, which we've done since the last go-round in the late 80s, early 90s. We have a construction management group, and we also do real estate tax appeal work. So our hands are in a lot of things.
Very good. And in the West Palm Beach area, how far do you kind of go out? It's 10 miles out each way, or how far do you go out?
Well, we've actually handled things down in the Keys, quite a ways down there.
Okay.
And we've also handled some assets for clients, trusts that we do work for, even as far north as into South Carolina, believe it or not. But it really depends on the size of the project. Our primary focus is really Palm Beach and Broward counties.
Okay.
And we won't take on a project unless we really know that we can manage it properly and service the client properly.
Well,
it really depends on the scope of the project.
As you know, I ran a real estate office in the Boynton Beach area for 4 years, early 2000, and your signs were everywhere. Your Reichel Realty signs. You are the man in commercial in that area, and so. Number one, kudos.
It's nice of you to say that.
Oh, absolutely. Kudos to you. Give us the 2011 perspective. What happened in your area as far as real estate? Because it's been a crazy year.
Yeah, it's been. I think the best thing that happened in 2011 right now is that it's over. From my perspective, it's been a really challenging year. I think anybody that I've spoken to says, I'm working 2-3 times as hard and I'm making less money, and I think that goes along with everybody. We found the same thing. We worked on a lot of transactions that just didn't seem to get across the finish line. Like I pointed out, our hands are in a lot of things, so we had a decent year, but certainly not the kind of year that we're used to.
Right. Bill, I'm kind of losing you a little bit.
Okay.
Make sure you talk right into the
all right.
the phone.
Is that better?
Yes, that is
okay.
much better. Thank
Sorry.
you. No problem.
So, 11 was challenging,
Mm-hmm.
and we manage a big portfolio, over 1 million square feet, and we have like 300, 400 tenants we manage. So you really get a very good perspective on the economy when you're managing so many different businesses and tenants and centers.
Yes.
And office buildings, and they all really have struggled. I see towards the end of last year a turn for the better,
Mm-hmm.
and I would say we had a lot of things working towards the end of last year that are now floating into this year, and there seems to be a better degree of optimism, which is what drives the market, and hopefully we're starting to see some of the banks lend, which is so critical, and really they're looking to lend on commercial deals. I think it's one of the most amazing times ever if you can get a deal done and go get a loan for interest rates being so low as they are.
Right.
It's particularly business owners that want to own a building. SBA is still out there, and they're doing deals, and the banks that handle those SBA loans are very aggressive. The underwriting's a little more difficult. You're going to jump through more hoops.
Mm-hmm.
But at the end of the day, you're going to have a very, very low interest rate. And I think once this economy turns, and I believe it will, we're going to see those rates come up. They're going to come up quicker than we thought they would. So we've had, I think, this degree of low interest rate for a period of time, and people kind of get used to it, but it can go away quickly.
Yes.
So
yes.
I think it's time. I see people seeing that, and they're making decisions and moving forward, which is all positive.
Well, in a downturn, and you've been through a couple of them, as I have, working with government entities and really being on the forefront, you've seen a lot of people buy real low and do very well for themselves. It's a time where if you can buy right, you can make fortunes.
Yeah, I think fortunes will be made. And when we look back on these times, people that have, and there's a lot of equity out in the marketplace looking for deals.
Yep.
Still, maybe holding off pulling the trigger. But I think when we look back on these times, fortunes will have been made. I believe that. So I think there's opportunity out there. In any down market, there's tremendous opportunity. We did see it back in the late 80s, early 90s. And I think we're on the forefront of seeing some more of that right now.
Any trends that you kind of think of in 2012 that will kind of emerge? We all know about multifamily being so hot.
Been amazing.
Yes.
I just was reading where the vacancy rate is as low as it's been in I don't know how many years. It's right around 5%, and now rents are rising. But in the same token, rates on 30-year mortgages are at their lowest rate. You can get a 15-year fix for 3.2% now.
That's amazing.
And 30 years under 3.9. So I've seen a lot of aggressive buyers for apartments buying at low cap rates, 5% and thereabouts. And I don't know how long. I guess they've seen something I didn't see. I thought that was a little too aggressive for my taste, but I'm seeing it happen, and those rents are now rising, so their return will get better.
For our general public, what is a cap rate, and how does that determine if you want to buy or not buy if you're an investor?
Well, a cap rate is a calculation based on net operating income, which is your income from a commercial property after all expenses. And then you divide that by the NOI to get a cap rate, what you pay for it. So, if you had a property that had a net income of $100,000 and you were buying it on a cap rate of 5%, you would pay $5 million for that asset. So you're asking me tough questions this morning. 100,000.
It's Friday.
I know. Yeah.
Well, it's a term that investors use and kind of
return on their invested dollars.
So if it's low, it won't give
paying more for the asset the lower the cap rate is.
Got it.
Exactly.
But it's more solid of an investment. It just won't give you as much return. Is that
exactly?
Okay.
The lower the cap rate, the more solid the credit and the investment.
Okay, and the higher, the more risk and
exactly
all that kind of stuff. Bill, how do people get a hold of you? Because again, in the West Palm Beach area, Boynton Beach area, in commercial real estate, you're the man. How can people get a hold of you if they want to buy or sell?
Well, you can go to our website, which is www.reichel, which is spelled REICHEL, realty.com. Our main office number is 561-478-4440, and you can reach me on my email at B as in boy, Reichel, REICHEL, realty.com.
Bill.
Reichel at ReichelRealty.com. Excuse me.
Bill, thank you so much.
Okay, Doug.
And you and I have worked together before. I hope we work together again. It was many years ago, an FDIC project in West Palm Beach, and you did a fantastic job. Thank you for calling.
As you did.
Well, thank you. Thanks for
Doug.
calling in, and have a great weekend, Bill.
Hey, you too.
Take care. All right, that was Bill Reichel from Reichel Realty in West Palm Beach. We're going to take a break at the half hour and hear from some of our sponsors. I want to thank you for listening. We will be right back with 2 more VIP real estate experts, and we'll listen about what the trends will be. Thank you so much. Okay, we are back. Again, it's Friday. We're broadcasting from the beautiful St. Augustine, Florida, the nation's oldest city, at WFOY 1240 AM. This is the National Real Estate Auction Radio Show. Earlier in the show, we got Steve Papermaster from Rockville, Maryland, who is the president of a title company, call in, give his perspective. And then we just listened to Bill Reichel, Reichel Realty president. He's from West Palm Beach in Florida, commercial real estate broker, gave his insight on what happened last year and what's happening, or what he thinks is going to happen in 2012. Good stuff. Again, our mission statement is to provide an educational experience for listeners in a promotional format for auctions across the country. Very thrilled to have the quality of people call in. A lot of these people I know from 20 plus years of doing real estate auctions. I've worked with them together in many different states. For instance, Bill Reichel and I worked on an FDIC project in West Palm Beach, which was a lot of condos, and I can't really remember how many they were because it's a few years ago, but probably more than 100 condos that sold as a package up in West Palm Beach. And we use real estate brokers all the time. I mean, we get the listing, but we also want to work with a local real estate expert to give credibility to the sale, to someone that knows the marketplace, somebody that people can call into and get more information on the property. And so we're like the auction experts, but we reach out for real estate brokers and help them get to the buyers. And Bill Reichel's done a great job for us past. Let's go to a new caller. Good morning. You're on the air.
Hey, Doug. It's Randy Thomas.
Hey, Randy. How are you doing, sir?
I'm doing great. How are you?
Well, wonderful, wonderful. Tell us again who you are and where you're from and what you do, Randy.
All right. Randy Thomas from Detroit, Michigan, and I'm the principal owner of a firm called Insight Commercial Group. And we specialize in all aspects of commercial activity, from development, brokerage, property management, and construction. In our market, we have an office in Grand Rapids that we recently opened up, and looking at another market to expand our footprint.
Well, very good. You and I have worked in the past, and I tell this story a whole bunch because I've been up in Washington, D.C. They have government surplus properties, and so I talk about the sale we did together, that you actually were on the buying side and brought a buyer where we sold a parcel of land in the Detroit area, which was a state hospital, and your clients were developers and bought the property from the state of Michigan, which was a great success and helped. You got a good deal, the state got a good deal, but the taxpayers did well too. Give us your perspective on that sale, if you would.
Well, it was an asset located in one of the upscale communities in Michigan called Northville.
Okay.
And it was a 414-acre parcel that stayed on 4 previous attempts, tried to auction off the property. And all 4 previous attempts had hair on the deals, from one aspect to the other, that the state had elected to stop the process and not pursue what they were doing at a particular time. And up until you guys got involved, it was a question mark of what they were going to do.
Mm-hmm.
And in my career, I probably put that in one of the top 5 most interesting deals. If you remember, Doug, that this was going to an auction, and I got a phone call from you and said I got some good news and not so good news. And you invited us to the table to negotiate a deal. The deal fell apart at the 11th hour, and I think it was after midnight when we left. And you and I both agreed that your client and my client didn't have their eye on the ball the right way, and we decided if we can get everybody back together the next morning to try to hammer out a deal, which we successfully did, and I think it was $31.5 million, if I'm not mistaken.
$31 million. It was a great deal, and your professionalism really made the deal work. Your ability to get your buyers there, and the sellers were there. The sellers were the state of Michigan, and they were there to talk to your buyers. And sometimes you need to be face to face to really negotiate a deal.
That's the upside of the auction process, because you were very quickly able to determine who the real buyers were and who would step up to the table. And quite honestly, that got us to the point to negotiate, whereas they would not negotiate with a single party, nor could they by virtue of the state constitution. They had to go through this type of process to sell any of the assets that they owned. It was a great success.
Well, it was a great success, and again, I thank you for your professionalism. Tell us, we've had somebody from Maryland on the show today, from Florida. Give us your perspective. The rest of the world is not really sure what's happening in Detroit. Tell us what happened last year first, and then give us an insight of what. How do you like that inside commercial? Was that good? On what's going to happen in 2012.
If I just go back and it's a little history. If you go back about 10 years, the decline in the local markets, and I'm gonna say Southeast Michigan, primarily automotive related, a lot of tech related, manufacturing related. At one point, the real decline started in '99. The office market started getting hit in 2005 in land and retail, just before the national collapse or global collapse of financial markets. Just before that, started seeing pressure on the land and the retail market. During the past, let's call it 18 to 24 months, I think that there's been a significant turnaround. Not to the levels that we were once before. But the auto companies are very healthy. They're starting to hire. We've had the big three just recently. I heard in the news this morning, adding new shifts.
Wow.
Which means that there's health in the market, and they're taking bets on what's going on. They're all showing profits, and when the auto industry sneezes, typically Detroit and Michigan will get the flu.
Yeah.
As the auto industry starts to become healthy, our markets become that, and we're really starting to see some positive activity. I can tell you, the other brokers that we deal with on a regular basis that we've had great relationships with, everybody, 2008, 2009, had significantly, dropped production. Deals were still in the pipeline, but they couldn't get through the pipeline because of financing or cold feet.
Mm-hmm.
We're starting to see a little bit of, the banks here loosening up for the right deals. The underwriting's much tougher, and the equity requirements are much tougher. But for the real deals out there, we're starting to see activity. A little bit on some new office construction. We just did a 55,000 square foot build-to-suit for Tier 1 automotive headquarters. With all the product that's available in the marketplace, we were unable to really, find that exact requirement that fit them, and they elected to go the build-to-suit route, and with the bottom line savings of nearly $1.5 million a year from where they were in their current lease. And we've seen a couple other transactions happen like that in the marketplace. Dan Gilbert, who owns Quicken Loans, also owns the Cleveland Cavaliers. He's been a great catalyst to the market. He's been buying up downtown Detroit in the Central Business District.
Mm-hmm.
He's acquired 5 to 6 major buildings in the last 6 months, some of which he is, his or a series of companies are tenants. Others that he's using for incubator space to draw the talent pool back into Detroit and create the living district where people work, play, and live. So we're seeing some positive activity. There's also with manufacturing not being what it once was, there is a pretty heavy inventory of industrial properties on the market. So we've seen some adaptive reuse for those, whether they would be something that would not be ordinary out there, i.e., churches absorbing some of that space, and looking at some different alternative uses, recreation, etc. That's been some disruption on the industrial side. Retail, the retailers still are holding back on any major type of developments right now. Our sense is that's going to change this year based on at least the discussion that we've had with a lot of them. They're out looking. That doesn't necessarily translate to doing deals. But we're seeing kind of like the front stages of at least the retailers looking at Michigan again and kind of taking us off of the blacklist. So I guess I'd sum it up, Doug, in saying that there's no doubt that that Michigan, specifically Southeast Michigan, has had its challenges. The last 18 months has had a positive direction. We've got, I think, 2012, the pipelines are looking better and with more confidence that you're going to be able to monetize the work that you're putting in. Grand Rapids, which is another market that we opened an office in about 6 months ago. Grand Rapids is kind of like the donut hole in the state of Michigan. They have there's a lot of quiet money out there. When I say quiet money, billionaires that are in that market that a lot of people don't realize.
Okay.
You've got the Amway founders, the boss, and those guys in Van Andel that have made significant investments in the city. It's a very vibrant city. It kind of reminds me of a very miniature Chicago with people walking around and a lot of activity. The surrounding markets are, I guess, holding their own. And I would say in the past 2 years, that market probably outperformed the Detroit market as far as the two major MSAs in the state. I think that'll probably level out this year, and we'll see what 2013 and beyond. But bottom line, it's much better than it was before. And you and I had discussions on nothing happening here. You got to look at other markets.
Well, that's great news for Detroit and for Michigan and for you. It says a lot that you're expanding your business out to Grand Rapids, which is what, 2 hours away, 2 hours west approximately.
Yeah.
Okay.
2 hours west.
Okay. That is very, very encouraging for the marketplace, and I'm so happy that the auto business is doing better. We really rely on that business, not only Detroit and Michigan, but the whole world economy kind of is very tied up into the auto making, and so I'm thrilled.
Oh yeah, there's so much spin-off that goes from it, from the supplier chain to the small little shops that are either making pieces or machining parts to make pieces on there, and believe it or not, that those are opening up. There's a little more manufacturing going on here than there has been the past 10 years.
Huh. Well, very good. Randy, how can people get a hold of you? You are recognized as a leader in the area. In fact, aren't you the president, weren't you the president for 2011 in the real estate field in the Michigan area or Detroit area? What was that?
Yes, I for the second time in 2004 and last year in 2011, I was president of the commercial board.
Wow.
I had to say I'm done giving my time there, and I'm back to focus on developing more business. But there's two ways. We have a phone number. It's 248-359-9000. And our website is www.insightcommercial.com. Insight is INSIGHTCOMMERCIAL.com.
Well, Randy, a good friend and always a pleasure to talk to you, find out about the Detroit and Michigan area. Hopefully we can do business in 2012 together. And again, thank you for calling in and being a leader in that area.
You got it, Doug. Good luck, and we'll talk to you soon.
All right, Randy, take care.
Bye.
Good morning. You're on the air.
Hi, Doug. Jay Brown. How are you?
Jay, how are you doing, sir? Thank you so much for calling. We've had a great show. We've had Maryland and West Palm Beach, Florida call in, and we just got off of the line with a commercial real estate broker from Michigan. This show is all about perspective of what happened last year and what our predictions going to be for this year. You are a bankruptcy attorney and in the Jacksonville, Florida area. Tell us a little bit more about yourself and also your firm, if you would, Jay.
Sure. I've been practicing with the Ackerman Centerfit law firm for over 12 years now, and I do primarily bankruptcy and commercial litigation and dabble in a little bit of other stuff here and there. Bankruptcy's been busy these last few years, as you can imagine, although one of the things that I read recently when they came out with statistics from last year was that for the first time in 6 years, filings across the country, bankruptcy filings, have been down around 12%. So in 2011, there were approximately 1.38 million bankruptcy filings, and that's down from 2010, where there were 1.56 million. Florida actually fared a little better, where filings were down approximately 16% to around 93,000, and that's the lowest since 2008.
What do you attribute that to, Jack?
I think that the interest rates staying low, the fact that a lot of the damage, I guess, from the bad economy has fallen out, and it would be my primary guess is I think cyclically what happens is that you'll start to see filings pick up in the springtime. Holiday bills kind of come in, and part-time jobs around the holidays go away, so that the people that might have been, for at least consumers, been hanging on, they would be looking to file around the springtime, and sometimes they wait to get a tax refund back and hold on for that kind of stuff. From the business perspective, I think a lot of it has to do with the interest rates remaining low, and although I feel like there still are some soft segments of the economy that we will still continue to see bankruptcies in. So one thing I read, I guess at least locally, is that that commercial tenancies continue to trend down a little bit, and that could lead to some of the owners of commercial real estate looking for bankruptcy relief. And in some ways, I think that a lot of the bankruptcy practitioners have a similar feeling there.
I guess my thoughts were that in the last few years, businesses and people who had loans, commercial loans, the banks really didn't want to take the property back and didn't really want to foreclose and weren't really being forced by the FDIC or the government to do that. And so it was kind of, well, let's see if we can work out a deal. Maybe you can pay a little bit less. We'll expand the loan. Do you still think that's going to continue, or do you think there's more of, back to, hey, you're delinquent. We're going to have to foreclose, and then the bankruptcies start?
I think that really depends on a lender-to-lender basis, and maybe even a borrower-to-borrower basis. You're right that there is a lot of that going on. A number of financial institutions have filled up their real estate portfolios and are managing those, and are probably realizing carrying cost with the real estate that they're holding. So that turns them to agree to more favorable type of forbearance deals or extension arrangements that you might not have seen historically. But I think it really is. It's based on a loan-to-loan perspective, and also a financial institution. I don't know if we talked about this before, but there had been a good bit of sell-off by financial institutions, banks primarily, of distressed paper to investor entities and whatnot, that those persons might be more aggressive in seeking foreclosure and seeking to liquidate their collateral in other ways than a traditional bank would be.
Okay. Very interesting. Tell us more about Ackerman Centerfit.
Sure. We are a nationwide law firm. We have over 500 professionals practicing. We started off as a Florida-only firm, but we've got offices now in Washington, D.C., New York, Los Angeles, Las Vegas, Dallas, Denver, and a lot of our expansion actually has been in defending against claims brought up in mortgage foreclosure. So we've got a consumer finance group that deals with that, and has led to a good bit of the growth of the firm over the last few years. We're generally a business general service type of firm. We do a lot of tax work in addition to having a strong bankruptcy group and strong litigation group. We have strong transactional services, strong real estate department, tax practice group, specialize in ERISA matters, a whole host of practice areas that we service.
Well, I've done some work with some of your counterparts in South Florida, and great firm, really a leader in certainly in Florida, but you're expanding is a wonderful thing. What do you think, in a nutshell, what's going to happen in 2012, if you had to guess as far as a trend?
Sure. I'd like to say that my belief is that we won't see much change as far as interest rates. Mm-hmm. I think we're dealing now with an election year, so that creates in my mind an environment where there's not going to be major changes, or at least from a legislative side, I don't think that much would be able to get pushed through.
Right.
I suspect that we'll see some real estate trending up in areas that maybe the economy is improving, but likewise there could still be some places where you don't see either a trend up or possibly some more softening. And but it's still hard to say. I don't see a great deal of improvement. I know there's some optimism out there, and I certainly share in that to a certain degree, and want to see the markets improve. But I don't think it's going to be anything tremendous as far as the economy improving. And I'm no expert, but that's just my personal belief. And the election year certainly should keep things interesting, but I'm not sure from a real estate perspective we're going to see a lot of major changes in 2012. Certainly, I wouldn't think so in the earlier part.
Well, thank you, Jay. Jay, how can people get a hold of you up in Jacksonville, Florida? Because you are obviously a person to talk to if you're in the bankruptcy field. You may want to work with Jay Brown.
I appreciate that, Doug. Well, one way to get in touch with me is through my firm's website, which is www.ackerman, which is spelled AKERMAN.com, and my office phone number is 904-798-3700.
Jay, thank you so much for calling in. I hope we can work together in 2012. I want to wish you a happy new year, and again, thank you for calling in on a Friday.
Happy New Year to you too, Doug. Thank you for this opportunity.
Take care, Jay.
Take care.